Hello, everybody. Welcome to Trading with Livevol. This is Stefan. I was off this Friday, and looks like John did a great job talking about the Russell. Hopefully, I can have him on a little bit more because he trades a little bit differently, and I think just having more variety and having different kind of ways you can use Livevol X is a good way to go. So I actually have a pretty packed show today. Let me actually go to my account. So I'm doing pretty good today. I'm up about 1,800. Most of it from Hillshire and AstraZeneca, and I'll kind of talk about that, and then we can go from there. So let's actually talk about AstraZeneca first. So basically, it got rejected like we were talking about, but the stock didn't go down because most likely what's going to happen is they're going to talk and then they're going to come to a deal later on, because they weren't really off by that much, right? So they were off by like $5 or $6 in terms of what the agreed upon price should be. So most likely, with all the pressures that both Pfizer shareholders and AstraZeneca shareholders are going to put on them, there's decent chance, I would say like 50-50, that it'll go through, maybe even a little bit higher. For me, I basically bought this back for 30 because I thought, see, my thinking is kind of like this. This AstraZeneca really should be trading higher than this price. And the reason I say that is if they get bought out between $93 and $98, and then let's say there's a 50-50% chance of that happening, and AstraZeneca as a standalone, might be like $65. Technically, with the discount and stuff like that, it should be somewhere in between, right? So let's say 95 to 65, $15, it's around $80, and then you put a $5 discount. So I'm thinking AstraZeneca should trade around $75. So I was kind of positioning that way. I bought these back for 30 cents. So let me actually show you my trades. So these are all my trades for today, so I was kind of busy. Let me show you AstraZeneca. So I bought these back for 30. I bought the June 80 calls back for a nickel. So I basically own this just in case something fluke happens. But essentially, I think the stock is going to stay here or drift up, or they might have some news where, they might do some, the shareholders put enough pressure on AstraZeneca, so they'll be willing to talk more, right? There is trades. So I'm trying to buy more for 30 cents, but I think that is over. Something that is interesting to me is doing some kind of time spread. So if you look at the stats, you can see that people are buying these puts, but they were doing it with stock, right? And then these calls looks like, who knows what they were doing. But my thinking is if you can do something like where you buy these Octobers, right? October 80s, and sell something like, maybe these July 75s, that might be good, but it's just kind of risky. You want to kind of do 80-80, but then these don't have too much value. So one of the things I want to show you is the skew chart. So normally the skew chart, the puts have more value, but in AstraZeneca, and let me get rid of Maze, basically the call side is basically same as the put side, if not higher, right? And if you look at the skew, you can actually see that the front month, like the Junes, are lower than Jans. And the reason it's lower is because people think after 3 to 6 months, Pfizer and AstraZeneca will get back on the table. So all the options that people are interested in is these, and these are just being sold, right? So you can do something like that where you're basically, you know, doing some kind of spread. Maybe, you know, I was thinking of selling more of the these Junes. So I was thinking maybe I'll sell some of these. So this is my risk chart right now. So basically, by me closing and buying all those, this is what I'm left with, right? Just basically, it's kind of like semi-stock position. So let's say I'll sell some calls. So I want to sell 2 of these, and then sell 2 of these. Do like a straddle, right? And then let me actually look at the risk. So you see how it basically flattens it out more, but now I'll be able to collect some money if, and let me actually get rid of these. I can actually collect money if this stock goes right here or goes slightly higher. So like at this point, I can still make about 265 bucks if I actually start selling some straddles and the stock stays right here. I guess I can sell more. Let's say I sold 5. Right, this is how I would look then. So I won't look as good here, so maybe what I need to do is maybe buy 5 more of these, right? Let's see how I look now. Yeah, so this is not bad. So now if it stays right here, I'm gonna make 800 bucks. If it goes higher, basically I'll do okay because I have extra calls, right? So let's see, 25%. So my dead spot is right here, but even if it happens in the next couple of weeks, it's not too bad, right? So let's say I'm gonna do this, right? So let's do sim to complex. I'm gonna sell 5. Actually, let's do 1. So it's a 1-to-1-to-1, and looks like I can sell for around 350, right? So 350. That's if I do a 267. Give me a second. I'm kind of trying to do this. 370. 370. That's 15. Yeah. So 355 is probably not a bad number. And I'm only going to do this once because I think I'm going to try to see if the stock goes up, and I would like to do the straddle, maybe the 72 straddle. But in the end, like I'm gonna just put the order in, see if I get filled. So I'm gonna send this order now and see if I get filled. It's a 1-to-1-to-1, but you know, obviously I can do it 5-by-5-by-5. So that's AstraZeneca. Let me actually talk about MRVL. So I did that time spread for 7 cents. Those things basically expired worthless. So let me actually show it to you. So basically it went right up to here, expired worthless on Friday. Let's look at historical trades. Let me look at MRVL. For those of you guys. So what I did was I did this spread for 7 cents. See how I sold the May 16th and bought the May 30, 16th? So these went to 0, and now I was left with these. And basically this morning I sold 40 of them for 14 cents. So let me see if I can see it. Yeah, so you see this MRVL. I sold 40 for 14 cents. and basically now I have these 40 calls for free, right? Or for for 0 cost. And I guess I can just sell this for a dime and make 400 bucks, or I can just keep it. So, my thinking right now is kind of mixed. I haven't made my decision yet. So this is the weekly. I'm gonna update it. So it went down like this. It could actually go further down, or it could bounce back up. But in the end, the concept now is just basically the concept was good because I got away with it, but because they were buying so many of these calls, the true thing is, are people closing like myself, or are they opening, right? For me, right now I'm torn, so I don't know if I should just try to sell this for a dime and collect 400, or if I should just let it ride and see if I can get, if this thing can go up to like 1630, which I'll triple my money from where I'm right now. But it's kind of like a toss-up, and I haven't made up my decision yet. I was just kind of waiting it out. Plus, I had so much other stuff happening with AstraZeneca and Hillsbrand that I kind of left it. So let's actually go to Hillsbrand. So for those of you guys who don't know, they got a bid from Pilgrim's. I forgot what the Pilgrim something. Let me actually see. Pilgrim's Pride. So they got a bid from Pilgrim's Pride for $45 cash, and so if you guys know, I had this trade. It's very similar to MRVL. So if you look at my historical trades, I'm going to go to Hillsbrand. So people were buying all these calls, right? The June 40. So I bought with, but I didn't want to pay 45 cents. So you can see I sold these for 31 cents, right? So basically I did this spread for 17 cents each 5 times, and after these things expired worthless, I had 5 of them, and I sold 3 of them, so I got 2 for free. Obviously, if I knew that they were going to turn into $5, I wouldn't have sold these 3, but I sold 3 to basically have a free shot at it, and now it went up to 45 bucks. Now this morning, I bought some of these for $4.90. So I've been in a lot of these things before, these takeovers, and usually they don't get wrapped up quickly, right? So most likely what happens is your first bid, like anything else, is not your best and final bid, right? As we just saw that with Pfizer and AstraZeneca. So I'm thinking it's the same thing with Pilgrim's Pride. They are not, it's not like Hillshire agreed to the buyout. So my thinking is they took the first shot, and then eventually they'll probably raise it because obviously Hillshire will have to reject the first offer. That's just standard. And then basically then we'll see what happens. But this happened with Joseph A. Bank and Men's Warehouse, and basically this kind of thing is probably going to happen with Hillshire. The thing with Hillshire that was very unusual, now there's block trading all the time, but the thing with Hillshire was how many days in a row they had this block trading. So you guys can actually, let me actually, I don't know if this is going to play, so hopefully it doesn't play. Okay, it doesn't play, but if you guys go to this date and play it, I talk about how people are buying all these calls at Hillshire right after they bought Pinnacle. So the whole decision now is whether Hillshire shareholders will want to go with this Pinnacle Foods or change their mind and go with Pilgrim's Pride, right? My thinking is if I was a shareholder and I bid, so I bid 50% of my shares and $18 for Pinnacle Foods. So I'm actually going to, so you see how it's $31 now? So basically, I'm going to give them half of one share, plus I'm going to give them $18 in cash, which to me right now seems like you're overpaying, right? So if you think the stock, let's say it's not worth 45, but let's say you think it's higher than 36, like 40. So if you think you're paying $20 for, you're giving Pinnacle Foods $20 worth of stock, and then $18 in cash, that's $38, right? So is this Pinnacle Food really worth $38 is what you have to go through if you're a Hillshire stockholder. And my thinking is, knowing, you know, how I would be if I owned Hillshire, I definitely would say no, don't go with Pinnacle and go with Hillshire. So there's no like in-depth research on this. This is just purely my opinion. I do think it's not going to get resolved quickly, so I do have this spread on in Pinnacle where I want to buy these, but I don't want to pay for it. So basically, I'm going to sell these against it. So I have 25-cent bid on it. I think it's right here. PF, right here. You see it, 25 cents. Most likely, I'm not going to get filled, or I might get filled. But if I do, you know, it's a cheap way to like basically get some interest or data, and then we'll see how it goes. So Hillshire. So as soon as it got announced, I bought 3 of these for $3.90. Then I started proceeding to try to sell 5 of these because I feel like they're not gonna resolve it anytime soon. So there's a good chance of this happening. Also, when these things get announced, and I want to show you you see this vol chart just getting crushed, right? Now the 30-day vol getting crushed is one thing, but look at the 360-day, the leaps. You see how they went from like, what is it, 26 to 15, right? 26 to 15 is gigantic vol movement way back then. So what I always try to do, you see these bids, I'm working on all these puts because I feel like there could be one point where Pilgrim's Pride kind of threatens to walk away from the deal, and if that happens, basically the stock's going to take a intermediate dump, and you want to own these options, right? Or let's say it doesn't happen altogether. You see these are worth like 97 cents. It's 15 vol. If I should put in 26 vol, right? These are like worth almost triple, right? Without the stock moving, let alone the stock is going to go down by like $5, right? So not only is it going to go down, but this volatility makes this option triple right now. So owning these leaps and then figuring out how to pay for it is an awesome strategy every time on these deal stocks. But it's hard to get them. It's not that easy. So I've been on these, but you know, people aren't just going to sell them. You almost have to lift it and see how it goes. But that is how I'm thinking. So you see how people are like buying these calls. So most people think they're going to get a higher bid, right? So every trade I see, many of them are basically like, why would you buy the 45 calls if you think the deal's going to get done for 45? Makes no sense, right? Why is the stock trading higher than 45? It's because people are speculating that a higher bid is around the corner, right? They don't believe the first bid. The first bid was just to get Hillshire's attention, and then once they're serious, they'll make a higher bid and close the deal, right? So my thinking is I would like to collect some juice while this is happening. So I sold these June 45 puts 30 times, and then I bought 40 of these August 43 puts 40 times. So I bought more puts than I sold because I'm actually selling the 45s and I'm buying the 43s, right? So so if I look at my risk chart now, and I use my risk chart a lot, once I know a deal like this is happening, right? So so this is the thing for the next 8 weeks. I have 25% up and down. You can see, and I'll kill the June here real quick. You can see if Hillshire stays right here, I'll make another $1,000. If it goes down to 39, I'll lose 3,000, and then I'll start making again if it falls down to here. Most likely, this is going to be the pain point, and you see how like my P&L really never goes down that much once it goes up. So what I can do is I can try to lower this a little, and then try to buy some of this. What do I mean by that? Well, I can actually try to sell more of these, right? So let's say I go like, you know what? I'm going to sell 3 of these, and then I'm going to use this money, right, the $210 to buy maybe 4 or 5 of these, right? Do you understand what I'm saying? So I'm actually using this to do this, sell this, and what I'm now faced with is, okay, my downside looks a lot better, but then I actually don't have the upside anymore, right? So that definitely is not good. So let's do 2 and maybe 3. Right, so it gets, so like you see, I'm good until 50, so I'm not really going to worry about this. I'm willing to give up this because most likely this is going to be the outcome. So I can almost sell some more here, maybe even sell some of these, -2 and then +5. Right, so this is a lot better. Right, because $48 I break even. Only if it goes higher than 48, and essentially if it stays right here, I don't really lose anything more. I actually make just the same amount, but I just flatten these 2 lines out. So I push this down, went this up, and that's pretty powerful just to mess around with it. Now, the caveat to hold this is, I think as long as Hillshire is just dealing with Pilgrim's Pride, the stock, the upside in the stock is a couple of bucks. Where this could change is if there's another bidder for Hillshire. So let's say, whatever, like Tyson Foods or anybody else comes in and goes, hey, I want to bid for this stock, then it can start going to like the $50 range because it's like any auction, right? There's like this bidding craze, and then nobody wants to lose. So my thinking is I want to take some risk the first 3 weeks because usually what happens. Oh, so I just sold one of these for 70 cents. So you see how I have now a call spread. I have 5 of these and I'm short 5 of these. Now there's a little trick to this one. So let me actually go to my calendar. You see how there's a dividend here on the 17th? So most likely right now, these are an exercise because the dividend is 17 cents. You see the 17.5 cents. How do I know? Because you just have to look at the put, and the put's a dime at 15. If the puts are less than the dividend, most likely you're going to exercise. This one might be a little less, but I think it's going to be an exercise. So what I'm trying to do is I'm going to try to roll up. So you see, like, I'm trying to roll up from 40 to 43 or 40 to 42. I'm going to try to roll up so I can try to not have to deal with the exercise and just basically pay 30 cents to move up. Now, a lot of times when you guys do these, right, you guys might not understand like what the pricing is, right? Because you don't want to lift the bid and ask. Just so you guys know, and this is an option lesson, the call spread is same as the put spread, right? The call spread is essentially the same as a put spread, right? So if you want to know what the value of the call is, so let's say this one right here, I want to do the 40-43 call spread. I'm like, well, what is realistically a price I can sell it for, right? Now I can bring it up, and then it says, you know, 295, 270, 255, and I just pick 275. That could work, right? But if you look at the puts, right, the 43-40 puts, right, you see how the fair value is 45 and 12 cents. So the fair value on this is 33 cents. So if I want to get filled on this trade or have a decent chance, I probably will have to collect. So this is actually the real midpoint. So I'm going to actually modify, and I'm going to send the order. Oh, see, I just got filled, right? So now I'm going to cancel this. So did you guys how I did that? Now, please don't like send me emails and doing the exact format. It's not an exact science, but it's a very good way for you to figure out what the spread is. So now I got rid of this, right? So my downside is actually a lot less. So now I look at my risk chart. Actually, let me get rid of this. Yes, that's simulation. So this is my risk chart now. So before I was losing like, you know, 3,000. Now my most loss is 8,000. And if I were to buy maybe 5 of these and sell maybe 5 of these, so 45. So let's sell 3. Now I can make it really a lot better, right? So now I'm only losing 300 bucks, and I'm good up to $48. So that might be something that's pretty interesting. But I'm not really that interested in buying puts in June. Like, I almost feel like that's a waste, right? So rather than buy these, I would just rather buy something like these, right? Because most likely they're gonna chit chat, and then it's gonna take a while before it becomes down to like, you know, pull the trigger, right? Where they have to actually make a decision, yes or no. And it takes like, you know, maybe a month to kind of get to that point, maybe even longer, 2 months. But in any case, it's better to own these puts because these could actually come in much more than these. So even though these 43 puts are 40.50, I would much rather own the 42 puts, because to me the dollar doesn't make really that much of a difference, because if they walk away, the stock is going back to 36 bucks, right? So let's actually see. Right, so when this thing opened, you see how I have these puts? I was bidding a nickel and a dime because there was nothing in there. It doesn't look like I'm going to get anything. I'm also bid on the July 43 puts, which most likely I'm not going to get, right? Because everything here is trading around 65 and stuff like that. There's nothing trading here. So let's say let's say I can buy 5 of these, but I almost don't even want to do that. I'd rather just buy more of these, right? Because people are already buying these anyway, right? So to me, like, somebody's buying these and somebody's buying these, right? And I'll click on it here. So if you look at the time and sales, well, actually, it's hard to tell. You can see people are buying here, but you know, maybe they were selling. So it's not as clear, but it was a spread, I think. How was those spreads going up? Right. So this guy's buying the August 38 calls, was selling these, and well, yeah. So I can't tell. I would like to say like, hey, this is what happened, but I don't think that's the case. I do think most of the trades are people think they're going to get a higher bid because there's no reason to buy these, and I've been selling them. So now I'm going to kind of try to wait it out. So if I look at my risk chart, let's actually see how I do. Do I have any? Yeah, let me get rid of this. Right, so if nothing happens right now, I'm gonna make about 1,500 bucks if it stays right here, and I'll make money down to 43.84, and then I'll only start losing if it goes below that. So I basically have most of my range is between like 43, and I'm good. I'm good forever on the upside, right? But on the downside, I have this dead spot right around $40, and then it starts going back up. But most likely, it's not gonna. This scenario on the downside, my bet is it's not gonna happen. So I'm thinking like this is more the range the stock is gonna move between the 45 and the 46 or 47, right? So this is where I'm thinking it's gonna kind of move around. And this is where I'm betting the premium is going to go down. So this doesn't mean I have to hold it till expiration. It just means that I'm just gonna work it, and then if I want to get out, I just get out. So I can buy these back. Let's say they talk about it, or the stock just goes back up to 46 because the new bid is imminent. I would just buy these puts back. Okay, so that's a very long explanation of Hillshire. So, you know, as a trade on the floor, I used to do this quite often. So I would read about it, and then depending on the situation, I would make my bets, right? So, and I would use this risk chart to see where I want this hat to be, right? Because you kind of want this dead spot to be where the stock most likely isn't going to go. So you see this down dip. This is what I am saying right now with my position is the least likely position for the stock. If you actually are afraid of this happening, then you need to adjust it. So one of the things I can do is sell these, but let's face it, it's not going to get bought for 53. So making money 53 on is kind of a waste. So you know, you can actually sell, you know, maybe 4 of these, and then, like I said, maybe buy 4 of these, and then see, then you kind of fixed it, right? So now you're kind of good until 48, and so I would probably be fixing this as time goes, but for now, that's what I have. And I just got rid of the dividend issue just because, you know, with a small account, it's kind of a pain in the butt. Okay, Facebook. So Facebook is kind of performing nicely. I have these calls, and basically I'm just waiting to sell another call against it. I bought the other ones back for like 17 cents, and so maybe I can sell like the June 65s or something, right? If it gets up there. So I'm kind of hoping like this becomes like this. So if this goes up another like $1 or $1.50, I can start selling the June 65s. Let me show you what I'm talking about. So like you see the shape, if it goes up to here, I can sell it, or I can just kind of ride it naked, because it looks like the market is kind of like just rallying for no reason. So it could actually just keep going up. So maybe I'll see how the overall market goes, and then I'll kind of take my cue from there. Now my Facebook is kind of hedged with my Tesla position, even though I still want to buy free calls. So you see how I bought these and I sold these, and I did it for $2 credit, right? So if you see now, I'm kind of like break even on this whole trade because Tesla basically rallied like $20. But you see like how powerful that is, where you have this spread on, right? And essentially, Tesla goes up 20 bucks, and you are actually still doing okay, right? So it went from like basically like all the way from here to here, and I'm not really sweating it because I have this call spread, right? So a lot of times people go like, oh my God, what are you gonna do? This is in the money. Well, I'm not really worried about this one, right? I can buy this and then sell the July 190s. As long as like it's not like so far out of the way. So you see how these June 190s that I am short? See, I can buy these back, right? And then I can sell these. So these are like 22.85, right? Fair value. And then I can sell these for 25.85. So I can roll it, and I would have still been able to sell it for more than original. And I actually, if it goes down in July, then I basically gonna make a really good killing, right? So don't worry about it. You can even sell like the 95s for like even almost, and then basically what you did is you just rolled up a strike, so your downside is only 15 bucks. So you can do a lot of things. Don't sweat it because the calls you sold were in the money. The problem is like if it isn't around the 200 range. If it's like 250 or if it's 150, either way is bad. But as long as like Tesla is right here, this is like ideal for you. Like you don't want it to like keep going down. That's horrible. You actually want it to go back up, and then you want to kind of like have it go back and forth, right? So that's my Facebook and Tesla. Let me cover XLU because I don't want this thing to be like an hour, because you kind of want you guys to watch all of this stuff. So if you guys know, I basically, this whole position is anchored with one call, right? These SEP 38 calls. I'm short 9 other calls against it and short 12 puts against it. And basically, if you look at it, let's see, XLF, XLU, yeah, I'm still up, right? I'm still up even though I basically, the stock has just gone up, right? The index. So you know, XLU is my like little hedge against the market going down. Williams Sonoma, I'm short these calls from earnings, so at some point I'm gonna buy these back. And then HPQ, I was long that call spread in August, but you know, when I went through their earnings, it wasn't that great, so I reduced it by selling calls, and I have this 1/3. Right, so basically my downside is every time it goes up a buck, so it's like $36 is like when I start like losing money on this trade. But in terms of the stock itself, I guess I felt okay with it just because 36 is still pretty high, right? So it's been kind of doing this. The earnings wasn't spectacular. In fact, you can almost make a case that you shouldn't get long this, but you know, I'm not a fundamental person in terms of I'm not an analyst. So you know, my thinking is more like the earnings weren't that spectacular. It was all like incrementally down, all their services or like flat. So it wasn't that great. So my thinking is it's kind of fair value, and I'd rather invest in something else than Hewlett. So I think Hewlett might stay around for a while. So that's about it. Let's see. I'm trying to see if there was anything Juju. So I didn't prep up for the earnings. Let me see. I think they have earnings. Yeah, so maybe I'll come on. There wasn't that many earnings, so I was gonna skip it. But if I see something, I'll come back for the earnings. Other than that, hope your trading goes well, and I'll talk to you guys later.